great to have you on stage. So, tell me if I'm not mistaken, but actually, big data scoring, you don't need to open it, it's open. Big data scoring is actually, actually provides insurance and loan companies with credit scores on their customers, but those credit scores are based on the publicly available personal data of those customers. Also, you collect them from social media. So it's a mix of data, public data, social media. Just sum it up, please, so that we know everything about the model of big data scoring.
First of all, thank you, everybody. And I just want to, side note, tell you that we are not from Latvia rather than from Estonia.
Okay. Wow.
But
Okay,
anyhow,
that makes a big difference. I'm so sorry about that.
No worries. But anyhow, basically, to tell it in short, we are using differently publicly available databases. We're tapping into them and using this information and then correlating that to the person's credit behavior.
Okay.
So it can be in a form of a social media platform, it can be in a form of different government databases and so on.
But now, how difficult is it to actually be a trusted third party, especially when you're plugging yourself into social networks to grab the data of customers? But it might be, I mean, of course, and again, everything relies on trust, but still, how technically is that possible, and how regulatory is that possible?
Well, we as a company don't focus so much on the social media aspect rather than using different databases.
Okay.
And as proving our trustworthiness, then it's a fact that we are performing so-called very structured exercises where we can show on numbers what is the added value that we are bringing on the table. So the approach is alternative, but as we operate and as we manage is very structured and very conventional financial business like any other. So you can measure the value and you measure what is the uplift that we are bringing to the party who is using our services in numbers.
Okay. So actually, I think you have some more words for us this morning. So again, more customers, less risk. How do you mix them, blend them together?
Basically, it's a matter of using this extra information that is out there, and that enables us to tap to the markets that are untouched and at this point with this conventional approach, in a sense of we are able to tap into underbanked customer segments that are rising and actually can be very valuable customers that just hasn't been approached in this point. So basically, it's possible to have more customers and at the same time keep your risk level that you have observed in the same level or even reduce it.
Outstanding. If you do need a clicker, it's just up there so that you can, go through your presentation if needed.
Yes. Hello, everybody. Thank you for having me. And I'm going to be talking about credit scoring and using alternative and extra information in a sense of providing financial and credit solutions to consumers. Basically, like I said, you can have more customers with less risk. If you're a company and you're selling any kind of credit product, then usually your main objective when you're facing the consumer is to sell this product as much as possible and at the same time keep the risk level very conservative and low as possible. But usually it's a case of two sides of the coin. You have the sales side and you have the risk side, and you don't match them very well. Our solution and what we are seeing that actually at this point of time there's so much personal information out there that can be used and hasn't been used, that it's possible to use that information and have the effect of having more business and at the same time keeping your risk level very well managed and keeping it very conservative. Now I will get into some examples of what kind of databases we are using and what kind of databases goes to our solution and what we see as a valuable alternative data source to manage and analyze a consumer. First of all, if we are talking about online customer onboarding, then we would be looking into the technical information, meaning in the sense of what kind of device is being used. There's lots of information about the device, about what kind of software is the device running, and so on. we are tapping into government databases that are open sourced, meaning that the information that is out there, that is about the consumer, and we are tapping into it, using it, and then analyzing this in our solution. We are analyzing location-based information. We're looking what's nearby, what kind of address is it, and what kind of neighborhood is it. If you're talking about developing countries that don't consist very much information about the location as itself, they even might not have a specific address, then we are using satellite imagery to analyze the location and see where, in this case, there's a map about India where there's more electricity density and what neighborhoods are more lacking of it. So basically it comes down to the location analyzation that we are quite exactly knowing what kind of neighborhood is it. Is it some kind of a nice suburbia or more rough neighborhood? Also what we are doing is we are using search engines to search information about the web and then perform patterns and see what's popping up. So we are using major search engines to gather information and to analyze that. On top of that, we track and monitor the payment of the customer in the page where he is issuing any kind of a type of product. It means that we see how the person acts there, in what parts of the page he focuses on. For example, does he even read terms and conditions, or he skips it altogether? Also, how he types, what kind of speed, does he change any kind of inputs, and so on. So it's very good information in a sense of what type of customer are you facing with. This information that I mentioned and these examples correlates directly into improved loan quality. Also, you would be able, as a company, issue out more loans, and for consumers, you would be able to tap and to enter underbanked customer segments and allow them have the access to credit. So, to conclusion, it is possible to use the information that is out there, that is acceptable and reachable, and use that information and provide a service that is well managed and the risk is completely covered. Thank you very much.
Thank you so much, Erki. Brief question with you. Actually, I mean, this business model is outstanding, but I mean, I can totally figure out the reasons why your clients are choosing you to scoot around and curate all the information so that it can be way more effective when it comes to loans. But if I'm the customer, I mean, if I'm the one who's going to, bet on that loan, do I really want you to grab my data online? I mean, it's a real question of trust again. How can I trust a company that is going to target me for information that, of course, I've let on the internet, but that I don't necessarily want this company to, take part of?
Well, first of all, yes, of course, every time we do it, we notify the customer that you'll be monitored. But now there's a question of, let's say, if you're talking about the credit product and you would most likely you're in some kind of a need or you need it, then it's a matter of deciding, do I want to have those extra checks, then maybe I would be able to credit, or I just will choose to opt out, and then it's a matter of, I can tell you that the banks are even more critical and most likely you won't be able to get it at all if you are in, let's say, an emerging market where you don't have any credential history about credit. So yes, it's a fine balance, but in a way we see this, and in some cases maybe it's even better that you don't get the access to credit as you maybe just wouldn't be able to handle it.
Okay, thank you so much. Thank you for this outstanding business model again.